Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we do want to go over the pullback in the market. Of course, we do see some dumping in stocks, and it seems to be tech heavy right now, which is impacting Bitcoin. And there does seem to be some cycling of money in the market as we do see healthcare and financial and the energy sector just kind of pumping a little bit, which suggests more that money is being shuffled around and being put more into like a safe, safe stocks as opposed to the more risk on plays. And so, it's interesting. We don't really see altcoins taking that much of a hit. It seems like actually money is flowing out of Bitcoin and trying to get into a last hurrah for some of these like really just different altcoins here like a flow and zcash and like some of these other ones, right? GRT pumping off, and let's see, yeah, even Ape is going there. We are seeing a pretty good distribution of pumps on the market as Bitcoin finds a little bit of temporary support after a bit of a brutal fall. We can see, of course, as I've mentioned for the past couple weeks, that the CPI data is coming out tomorrow. You do see that the expectation, right, the forecast right here in this middle column is for zero point 0.5 and zero point 0.2 for the consumer price index and core CPI, and then the year over year 8.7, and core CPI year over year is a 6.1. So as you look at these numbers, just keep in mind tomorrow, if those numbers are higher than the expectation there, then probably that's going to be bad for stocks and additionally bad for crypto. And if the numbers are lower, then probably that's going to be good for stocks and good for crypto. And in this kind of a strange world that we're in, of course, the information is getting a little bit muddier because we're also paying attention to recession data now, which is separate from inflation data. But they are starting to converge into that just a maelstrom of called stagflation, which is potentially on the horizon, not right now, but perhaps at the end of the year or perhaps in 2023. So again, right now our main focus for Q3 until we get those Q3 earnings reports at the end of the quarter towards September and October, our main focus right now is just going to be inflation and kind of considering what the Fed will do at the next Fed meeting and trying to determine how intense the recession is going to be, and then the actual end of quarter three, the start of quarter four, or perhaps quarter four itself will give us clarity on that issue and will determine whether there's been a bottom to this market or whether this market has yet to bottom, right? So that's what we are looking forward to there. Of course, if we do look at the Bitcoin chart, you can see that we did have that nasty fall that I suggested might happen as the 4-hour volatility pump, right, which we established as a pump, a nice 5 to 10% pump off of that 4-hour volatility that I had given warnings for, with an average move of 5 to 10%, with some outliers as high as a 15%, but more or less in line with a 5 to 10% on average. That move did play out with approximately 5 to 7% on that pump. And then what I suggested is when that 4-hour volatility move played out, probably the 8-hour volatility move will be initiated to the upside if we can close, well, at least a 4-hour candle, but preferably an 8-hour candle above $24,000. And Bitcoin just was not able to do that. And so what we saw is a dump on the charts because, of course, the volatility tested the lower end of it, right, as it retraced some candles. And then we lost that critical area of 23,000 500 when the stock market decided, that they've all reached their 200 MAs, right, EMAs, and so they're doing a little bit of a retracement, and now we've come down to support to that very critical number that I've mentioned, which is 23,000. And if we lose 23,000, and close underneath 23,000 at the end of the day, and to be honest, even I believe we should be above 23,500 and reclaim this candle up here. But if we close underneath this area, there's a good chance that the daily volatility that we're building up can actually end up sending us downward even further, and that just goes hand in hand with this teardrop theory, this kind of a growth curve model that I've been pointing out for the last couple weeks here, where if you align all the points, and pardon me, trading view, whenever it resets, like sometimes it moves stuff around, but the key point is you get these main points to line up, and when you get about 3 or 4 of them, you really don't have much play. What happens is we broke down from my teardrop, and then, of course, that's when I consider the markets to start crying, because even though there's often a fake out pump to the upside, once you retest that growth curve, then there can easily be a breakdown. And, again, I don't care what you call it, a retest or whatever. The point is, like, the market has this type of behavior quite frequently, and it's something that you can count on, as we've seen it happen just time and time again. And although this one was a little bit on a smaller time frame, you did see like a dump, a breakout of the teardrop, retesting it higher than where it broke down from, and then a massive dump. You see us breaking down, retesting higher than the breakdown, and then we're dumping, right? And then we have this one last support here, which is where my green box was. We definitely don't want to violate that zone, because as soon as we violate that zone, down we go, right? And as you can see, same thing happened up here. Like we had a massive teardrop, just a massive teardrop being formed. And what happened is we, of course, broke down from it. And once we broke down from it, let me just get these points lined up again. Stinking trading view. Let's see. Once you break down from these points, then what happens is that you get a little bit of a retest there. And okay, I'm not going to make this one perfect because I don't know. TradingView just wants to mess with me today, I guess. There's been a couple issues with TradingView this morning, where they actually reset some people's charts, where it was giving you like the open instead of the close of the candle, etc., etc. So sometimes they have these little weird, like, it shuffles your drawings. But anyway, we broke down, we retested higher on this curve, and then when we lost the critical support of the wedge formation, then of course down we went. And the teardrop is what implied the final stage of the wedge. And you can see a very similar thing over here, where we have these points of contact. And then, of course, in this one, it was just a breakdown and then a retest to the upside a little bit. And then we just continued to break down. Of course, this one was so massive, spanning, pretty much 1 year, that it's pretty unbelievable that this fractal just continues to play out and play out on these smaller time frames. But it absolutely does, and we do seem to be facing one of those times right now. So again, we are at the critical support. This is kind of like a heads up. This isn't meant to be a tradable signal. This is meant to be a heads up. Although, if you had taken my advice there, I was suggesting that it looks like we're having a teardrop breakdown, and that probably would have been a reasonable short, just based upon the history of these growth curves and how they break down, touch higher, and then break down again. And then people who are trading wedges, right, like they don't see the curve, and so they actually get a little bit later. So I don't know, whatever bots or algorithms or market makers are using this kind of growth curve strategy, because it is consistent. They get a little bit of advanced notice on what might be happening here. But for the rest of us, we're just waiting on this one. And again, we really have to violate that to 23,000. I don't think just, as long as we're inside of this wedge, I feel okay. We're still on a little bit of a trend to the upside. and we haven't lost any key structure here. So I'm not going to freak out until we start breaking things in those directions. But let's see what else I have on here. Oops, just a little delayed reaction on TradingView there. So of course, on the 24/7 exchanges, pardon me, we were previously on the professional exchanges, which is why it didn't have this little dip here. But the 24/7 exchanges had this little like terrifying dip over here, and pretty much the same setup. And again, I mentioned like that would probably be a natural take profit point, and then the area that we would have to hold, I marked out this blue box for us. And you guys know I've had this marked out for days and days and days. And look at right there, right? Like we basically have been just filling up that entire box. So, guys, like sometimes this stuff works, right? But what you will notice is that we are threatening to break down from this kind of yellow little trend here, and we aren't really holding this kind of liberal like line that I have here. If we just make it a little bit more conservative and just pop this as far as we can go, just to give it as much of the benefit of the doubt as we can, since we did have a nice rejection up here, then you can see that we bounced off the bottom of this trend line that we do wick off of, and again, like it just like I had no idea how long this would go sideways. I had no idea the line would line up exactly right there, but look at the cross of my momentum shift limit with the actual diagonal trend using this one wick down here, which I was ignoring previously, right? Just kind of like bringing it up here, but because it's just like one little wick. But if we do consider that wick, which is fine to just to have these things be living things. They don't always, you don't have to use every wick. Like sometimes you can cut through some of the exuberance here, and you can see this is pretty much a flat top, right? Just have to keep in mind that also there's this more conservative one where you do take the wicks into consideration, and then you have this, this ascending wedge that you also have to be mind of, right? We're just paying attention to price action. We're not paying attention to formations. Formations and patterns, in my opinion, are largely garbage. They're just crutches. They're just tools to be used to try to time your own entries and exits. And they can give you a little bit more advantage because it helps you be more consistent. And there may be some statistical likelihoods, associated with certain types of formations like an accumulation wedge versus, an ascending triangle, blah, blah, blah. But the point is that, the main thing that we pay attention to is what is the price actually doing. And what we found is that the price stayed above our critical bottom line for the momentum shift. And so on a daily basis, we really have to see if we close underneath this 23,300, and that has actually shifted up to 24,000. So if we could pump up to 24,000, pardon me, that's the 4 hour. The 4 hour has pumped up to 24,000. So obviously we're just tanking. But on the daily, I think it's a little bit easier going. Yeah, 23,300 is still, at least for the daily, where we can hang on to our Stokes. How about for our RSI? Our RSI is looking for 23,800, and we do have an issue here. What I wanted to point out on the RSI was this drive of bearish divergence that's going to be built up if we close in our current area, and if we don't just make some type of a pump here, right? Because if we don't pump and make a little bit of a higher high or something and just change this chart, then we're probably going to end up having this bearish drive of divergence, which can send us even further down. And so that's when that momentum, pardon me, that volatility that's building up on the daily can just shoot us to hell, right? Even though it looks like it wants to pump up, from the bottom, it can actually just drop us to hell on the charts because volatility is direction neutral. You can't determine volatility by this. And if we do manage to recapture some of these higher areas, basically fill out this wedge, maybe even break above 24,000, then we can still be talking about having this move in play and reaching our stretch goal. But again, if we lose this critical area, especially 23,000, let's just say 23,400, if we lose 23,400, and like almost guaranteed, if we lose 23,000, then that momentum, that volatility can actually send us to the downside. And we've already established that it can be anywhere from 15 to 45%, moves. So again, that could bring us anywhere from 20,000 to 12,000, right? And that could be quite scary. So it's important to pay attention to how these things, to how momentum and volatility is working with your structure. And it's also important to understand what's going on in stocks, which I did mention to you guys before, well in advance. I mentioned to you guys that we did look fairly toppy on stocks, and I mentioned it up here. I didn't know we were gonna push past these this dotted line. That was kind of the the kind of fake out, I guess. But we did push up there. My friend Crypto Reda did mention that it was like a little stretch goal that the market had to get to the 200 EMA. And look at that perfect tagging of the 200 EMA. Of course, it was already written, it was already written that we were going to go down, once we tagged this dotted line that I had here, right, that I've had marked out, for weeks and weeks, right? Like it was almost guaranteed that that was going to happen. But there was the possibility that we could make another go. We did make another go, just like I mentioned, but we didn't close above there. And then this would have been the stretch goal, right? This would have been the stretch goal if we had gotten in there, because that would have been the limitation of our downtrend on a log chart. You see how this is touching right there on the log chart? But on the linear chart, like we're nowhere near there. And so sometimes traders are using the log chart, and sometimes they are using the more quote unquote local linear chart. And that's just going to make a little bit of a difference in how people target these areas. Typically, I'm on the linear chart, arithmetic, right? The arithmetic chart. And so that means that basically, these, it's a little bit more. Um, Conservative in the sense that the logarithmic chart takes into account exponentials, like huge growth curves. Now, the fact that this has been a price action ever since last year, we are in that kind of vague territory where people start using log charts. But usually, when we're just talking about shorter periods of times, the linear chart is much better. But you can see, like, if you don't use the log chart, on these long periods of times, then you can't really see detail very good. This is the linear chart, and here's the log chart, right? Just a second. And you can get a little bit more detail, as you're looking at this stuff. So again, the linear chart is just going to look a little bit squashed, but that's the real price action. And so the linear is a little bit more preferred unless you're really looking at that exponential growth, right? And those longer term analyses. But we are looking fairly bearish here. We are getting a little bit of temporary support. I can see on the daily that the 10 MA is giving us a little bit of lift. This is actually the Alpha 9 knockdown, but to the upside, right? And so, that could give us a little bit of a bounce right here, a little bit of support, but it can be a fake out because, as I mentioned, these things do have a tendency to squeeze through it, and so that can perhaps still continue to the downside. So just because we're finding a little bit of temporary support, don't get too convinced by that. Here's a good example of it. Of course, the 10 didn't push, didn't hold the candle back too tightly, but you can see that it actually just came down to the 20 here, this yellow line, and so we do have the potential of dumping quite a bit on stocks, and that could affect crypto also quite a bit. Let's see if on the daily, stocks don't have quite as much volatility building up, so we'll see how that goes. But I'm still bullish on Bitcoin in the long run. Again, Just because the 8-hour move may be playing out, it doesn't mean necessarily that the daily is going to conform to that. We really have to wait to see where do we find support. Can we find support at 22,300-ish? Can we find support around 21,500? Where we have this kind of 50 EMA. Can we find support, a little bit on this kind of like double trend line that we have here around 20,000, 20,500-ish? Maybe, I mean, we might be able to find support in these areas, but again, like on the weekly, it's just going to make things pretty ugly if we end up closing there, uh, because we are starting to get a nice curve, right? You see how this a 20 weekly is starting to curve up, and this 200 EMA on the weekly is starting to flatten out as opposed to like rounding, right? um, which it could have started rounding down, but it started to flatten and it's starting to turn up a little bit. And then we also have the 200 MA, simple MA, which is actually going upwards. And in order to keep that bullish, we have to hold on to this $23,000 area. Otherwise, this really thin orange line right here is going to start dipping down again. And that's going to, again, like just bring all of these lines down as opposed to moving up. And so holding in this area, we really have to do that. And $23,000 is one of those critical numbers to stay bullish. So please watch out for where we close at the end of the day. It's not really about, uh, you know, the last couple days. That's just been positioning us to be in either a stronger position or a weaker position. We're now in a weaker position. Like I can really say that we are in a weaker position going into tomorrow, CPI day, right? Where if the data is bad tomorrow, then we are in a very weak position. And the way that we get into a strong position is to pump up and hold that $24,000 level, right? And we're just not there, guys. We're just not there. But you can see that if we do bounce around here, we still more or less have an accumulation wedge, and so we probably have one last shot. And if the CPI data ends up coming out, really good, then perhaps that daily volatility can swing to the upside. I'm repeating myself a little bit just because I think some people may be unfamiliar with some of these terms, or they may need to hear it a couple times to understand, and I'm just trying to also say it, while we're on different time levels, time frames, so that you can kind of see what the price action looks like there. But overall, this is kind of just a reset to where we've been for the last week or so. Only we're in a very fragile spot where we can easily break down. Okay. Let's just pop over to Ethereum really quick. I haven't really taken a look at Ethereum, but yeah, basically the same thing for Ethereum. Okay, this is a pretty harsh breakdown. Oh, look at that! Look at that! Right down to my level. You see that? Right down to that dotted line. That's perfect. Yeah. So we basically filled out this momentum and volatility like a gap that I was talking about, and we're just struggling to hold that. Now I showed you how weak stocks look, and so if stocks do get to have another drop in them, then this is going to come down. Okay, this is going to come crashing down, and we can probably look lower, but I don't have any real numbers to give to you because tomorrow is going to be such an important day. Again, like even though we're positioned fragile right now, very fragilely right now, if the data comes out good tomorrow, there is the possibility for a reversal to the upside. But just would I count on it? No. And that's why when we were looking at coins like a KDA, I mentioned that it would be a good thing to probably take some profit up here at 238-ish, right? We were at 240, 238. And so I had this red zone, of course, marked out based upon where we had a sell-off over here. And so I just suggested it would be good to take your profit here. I suggested maybe we could fall back into onto this trend line, But if that trend line didn't hold, look where I marked. Look where I marked where you should buy, right? Like on this line, and we pretty much hit that line. I didn't know we were gonna fall so hard, but so I guess this was a little bit ambitious. But you can see that we did basically go straight to that area a little bit prematurely. I really thought this was going to give it another try with the stock market. Also, that also had gave it that second try, but of course, just Kadena just had massive profit taking, and that's very typical of Kadena. As we've mentioned several times, it does like to fully retrace many of its moves, and so this was a full retrace where basically we got in here. You either took your profit, right? You either took your profit on this line that I had marked out here, on this red box that I had marked here, or what did it do? It just like fully retraced, right? And so here's like a second chance. Of course, we don't know if the market is going to bounce from here or not. This trend line obviously, oops, this trend line obviously is being forced to be moved, to here now. And so, we could just break down again. We do kind of have a double support here, right? You see this line, it's diagonal, and then also you have this line. So, which is, kind of a horizontal here. Hopefully we can hold that as support. We've pumped there before, like pumped here, right? We pumped off of it here. And so potentially we could pump off of it again, right? We could pump off of it again, but if we get underneath these lines, then probably we're going to come back and check out the bottom of the range down here. And I'm just going to leave that thickness. It could go lower, it could, be higher in this box. I'm just going to leave that thickness. So if we do end up working our way down here, then I would just suggest buying along this growth curve, 170 to 180, that kind of zone, just like I had marked out, basically like $2 to 205 or whatever down here. Let's see if there's anything else to look at. We do see that volatility is just pumping up a bit, so that's going to make trading a little bit uneasy. We did recover our support, which is not good for trading, right? I mentioned that would be not good. We recovered it, and that's not good. If this thing pumps up, we're going to have very bad time. Okay, if this thing just starts pumping up, we're going to have a very bad time. And my guess is the dollar is also just chopping it out. And sure enough, it's just recovering a little bit. Still holding on to this 200 on the 4 hour. All right, guys, I'm gonna wrap it up there. Again, like it's very questionable right now. Okay, like I don't know how else to say it, but we have to hold those levels that I've marked out and that I've had marked out for multiple days. You've had plenty of time to take your profit in these like areas that I suggested to take profit, and then you knew where a possible support would be and where these possible supports could be if we break down, and then you also know the extreme version, which is if we could fall all the way down to like 13,000, right, or anywhere in between, because once you start falling, you just don't know exactly where you're going to land, and that's going to be heavily dependent on stocks. If we can recover and hold candles above 24,000, the momentum and the volatility shift will again go forward in the upward direction. It's just we're nowhere near there right now, right? We used to be there yesterday, but we're nowhere near there right now. We have to pump back up 24,000 and then hold that level if you want to see this move, and that's not going to happen. That's the most critical factor. Okay, like that's the number we had to beat, and we didn't get it. Okay, now we have some hope if we recover 23,500. Okay, but yeah, I mean it's just looking kind of bad right now, and we're getting a temporary bounce, but again, like that temporary bounce might just be the stock market being hung up on that that upside down alpha 9 knockout, right? So we'll see how this goes. Again, maybe it's just going to hold there for a little while, but it can still break down. If it can push through that 10 EMA, that kind of 9, pardon me, MA, if it can push through that, then we can see a wild ride down. All right, guys, those are alpha for the day. Stay safe and happy trading.